Good afternoon, everyone. My name is Carol Peters, and I am proud to represent United Way Next as Chief Executive Officer. I am a former United Way professional. I worked in McHenry County, Illinois for 5 years between the years of 2017 and 2021. So I know what it's like. I've walked in your shoes, and I'm so grateful that all of you have chosen to spend an hour with us. I love looking around and seeing the familiar names and faces, many of you who I've communicated with over the last few years. And some of you I may have just seen recently at the Great Rivers Regional Conference. So thank you again for joining, and we're just thrilled that you're here. I'm going to take a minute to have our group of presenters and staff introduce themselves first, and then give you a little update on our guest speaker today. So Ivy, would you like to go first?
Yes, so my name is Ivy Cirillo. I am the Marketing Communications and Events Manager for United Way Next. I started here earlier this year, and I was originally with Sioux Empire United Way. So I'm currently in South Dakota, originally from Florida, and I'm an author, a multi-passionate entrepreneur, and a public speaker. And just a quick housekeeping item before I hand it over to Denise and Eve and Carol again. After this session, I'll be sure to send everyone a copy of the slides and connect with each of you the resources that are mentioned today and anything else that I can provide. And please don't hesitate to let us know if you need any other accommodations. You should have the ability to turn on your captions or your transcript, but if you need any other accessibility accommodations, please don't hesitate to reach out to me.
Thanks, Ivy.
Mhm.
Eve, would you like to go next?
Sure. Good afternoon, everyone. Glad to have you here today. I had a long career with United Way, about 20 years with 3 different United Ways, and learned quite a bit and got to practice plan giving extensively. So I'm happy to talk to you about that all today.
Thanks, Eve. Denise.
Hello, everyone. Good afternoon. Like Eve, I had 22 years of plan giving and also major gift experience. I worked in education, healthcare, and social service agencies. And the last 12 years, I was with United Way for Southeastern Michigan. And I'm glad to be here today to give you some ideas and hope that will help you improve your career.
Thanks, Denise. So for those of you who are just joining, we had over 163 people register for this session. So a big session, we still have people joining. We're going to continue to let them in. We had a little change today. Unfortunately, our guest speaker called early this morning. She's out in Idaho fighting the flu and said she wasn't able to even get out of bed. So fortunately, we've got people like Eve and Denise who have been facilitating our planned giving sessions and are very familiar with the topic. And we're actually part of the planning session and preparing this. So they're going to be able to present to you the information that was originally planned by Roma Bose. Roma, though, extends her appreciation and understanding of her situation. She is still available to serve as a mentor and will be a resource to you. So despite the fact that she's not present today, she really wanted me to share with all of you that she is standing at the ready when she's feeling better to be there to be supportive. So without further ado, I'm going to turn it over to Eve and Denise to kick us off. And Ivy, if you want to go ahead and share the slides.
Can everyone see the welcome and objective screen?
Yes.
Perfect.
So welcome, everyone. Today's presentation was put together, actually, the slide deck by Roma. And so Eve and I, we had a chance to go through all of it, and we're going to do our best to fulfill what Roma wanted to tell you about today. So So the agenda is really Plan Giving 101. What is plan giving? An overview of basic plan giving vehicles, a resource which Eve and I are great fans of called FreeWill. And then we're going to have a little discussion about gift acceptance policies and why they matter. If you would like to ask a question as we go along, please feel free to do that in the chat, and we'll do our best to talk with you about that.
Great, thanks, Denise. So what is plan giving? Probably a very simple definition would be, as it says here, a way for donors to make meaningful gifts from assets and not income. Another definition that I really like that I think is also very simple is a gift carefully considered by a donor in light of estate and financial plans. So it's really a gift that donors have to think about a little bit more, I think, is the message here. Often arranged during life and fulfilled later. As we know, these are mostly deferred gifts, and also called legacy giving because we want people to be thinking about what their legacies are and what they might leave beyond their lifetimes. So why does it matter to United Way? What is the case for legacy giving? Why is this important for us? Well, a number of reasons. It does create financial sustainability for us. It does deepen donor relationships. You will get larger, more meaningful contributions because planned gifts are always larger than average annual gifts. And it is a good tool and a good gift for loyal, longtime donors. I would also add that just having an endowment or planned gift pipeline helps you in times of bad economic times so that you can overcome economic challenges that are happening in the economy. It is also good for emergencies or disasters that we cannot predict. And it can also help you if you have a special project that you would like to fund.
Okay, we're going to talk about the basic plan giving vehicles. We're going to talk about a few that we really haven't talked about much in other sessions, but really it's good to know about these different kind of vehicles in case one of your donors says, well, I have this and I'd like to know more about it. It's really good for you as a professional to have at least an idea of these kinds of vehicles. And if you want to learn more about it, you can, but it's always good to know what they are. And if you don't know the answer, you can always say, I will call somebody and find out. So the top basic vehicles are a bequest, as we all know, beneficiary designations, and we'll get into a little more detail about that, charitable gift annuities, charitable remainder trusts, and donor advised funds. So let's just talk about bequests a little bit. So a bequest is usually written into a will or trust. It's expressed in a flat out dollar amount, a percentage of their estate, or a remainder of whatever is left over after all of their estate has been doled out. Usually it is revocable, although I have asked individuals if they would make it irrevocable in their bequest. It is the one that 80% of our donors will do. It's most common and accessible. It's pretty easy to do. And I would say that if somebody does a bequest as a percentage of their estate, that's a very good thing. So if you're thinking of, say, it's a $500,000 estate, and they give you 5% of that, that's a pretty good gift from their estate plan. So I always liked it when I saw somebody had put us in their estate plan for a percentage of the estate. I thought that was a very, very good thing. And sometimes it ends up to be at the end of life and it comes through to your organization. It's a bigger amount than you started out with or had knowledge of. Okay, beneficiary designations. Okay, this includes life insurance, United Way Life, which is a subset of insurance, and we're going to talk about that, IRAs, and investment accounts. So retirement accounts include IRAs, 401k plans, 403b plans. And these are utilized very often by donors to make a bequest. But one of the cool things about IRAs is that it's very simple to do. The individual on their form where they keep their IRA, the company they keep their IRA with, they can just designate United Way, and they can express it as a flat out amount or percentage of their IRA again. And that's it. And what happens is when they pass away, it comes directly to the organization. Doesn't go to probate, comes directly to the organization. And that happened with me. I was working at another organization and got a notification from a credit union that we were to receive. We were the beneficiary of her entire IRA. And so that was awesome. And we got it within a week. Didn't have to go through a lawyer. It was a $500,000 gift.
Mm.
Now, I was working with the donor's attorney, and I said, so we just got this. And he goes, what are you talking about? That donor never told her estate planning attorney about this gift. I was working with him on the other assets of her estate. And it just goes to show you that donors, they know this is easy to do. They don't have to tell their estate planning attorney anything if they don't want to. They just make this gift, and it's very easy. And I would say that is one of the number one things you should do is talk to your donors. Do they have an IRA? Do they have a 401k plan? And ask them if they would include you as a beneficiary of it. It's very easy to do. Life insurance is another one. You can, United Ways can be a beneficiary of a life insurance policy. And I wanted to take a moment to really talk about United Way Life, which is a, United Way worldwide product. It's very unique to United Ways. And it's a way to get a gift of at least $250,000 that's irrevocable using a 5-year plan. It's tax deductible each year. And if you don't know about this, Evelyn Morgner is the person who led that program. And she would be the person to talk with more about this. Eve, have you got anything else to add to this?
No, I think it's a great tool for you. It's a good way to talk to your donors that might have a complicated estate because it is a whole separate vehicle. They don't have to, involve an attorney, and then they can, protect their family and make sure that their family's taken care of, or maybe some other organizations they want to give to. So it's a great tool for certain folks. And I think for a small amount, they can make a very substantial gift. As Denise said, you can start at $250,000. It's a minimum. And you work with United Way Worldwide to get those set into place. They work with only a certain number. I think there's only 5 insurance companies, and the person does have to be approved as you normally would in any life insurance plan, but it's a little simpler process. But they only have to make the premium for 5 years, and then they're done. And so it's a real great way to think about them giving and how it might fit into their estate plan, I think.
I'll just add one other fun note. When I presented this idea to donors, the bankers and accountants got this right away. They said, "You're kidding. I can do this." They did the numbers in their head. And that was an interesting thing to learn. So if you were going to try to do this, if you think you're going to do this, that would be one of my target audiences.
Mm-hmm.
Okay, charitable gift annuities. Okay, charitable gift annuities have been around for over 100 years. and they were utilized by colleges and universities, particularly women's colleges, interesting enough. So this is when you have a donor that says, I'd like to make a gift, but, I need a little income as well. And that's when you might want to start talking about a charitable gift annuity, because it's a promise to pay, the organization's promise to pay a gift, pay income for life to that individual. When the individual passes away, then the remainder comes to United Way. They are fixed payments and they're partially tax deductible, which is a plus for the individual. And it really is for older donors. Now, the slide says typically for donors 65 and older. That's true. The older the person is, the higher the interest rate that is used to calculate how much they're going to receive per payment. Now, a lot of gifts can start at 10,000. What I've seen recently is they've upped that to about, you have to get in at 20,000. Used to be 10, a lot more organizations are starting at 20,000. Some donors like them so much, they'll do multiple charitable gift annuities. I've seen that happen. So who can help you with this? Most organizations do not have the staff to run a charitable gift annuity program, because remember, it is a liability and a promise from the organization to make that payment to the donor for life. So there is an organization called the National Gift Annuity Foundation that can help you do that. Also, community foundations have picked up that mantra. They can do charitable gift annuities, have the expertise on staff, and run that program for you. Your job is to cultivate and ask for the gift and work with the community foundation to set it up properly so that the individual receives their payment each month. Eve, anything else to add to that?
Yeah, I've seen this work really well for couples, and maybe the spouse is wanting to make certain that the other spouse has an income after they die. So if you think about that, with perhaps a husband that has a larger income and he wants to make certain that his wife has a good income after he's gone, this works really well also.
Okay, charitable remainder trusts, or CRTs. Now there's 3 different kinds of these, but we're only going to talk about just the basic CRT. It's an irrevocable trust. And what happens is the donor will work with their attorney, their financial institution, and they will set up a trust. Usually now it's about $100,000 is the basic amount that would go into the trust, and they would receive income from the trust and would name beneficiaries once they have passed to receive income from the trust. When all the donor dies, if they don't have beneficiaries other than charitable organizations, then the remainder would come to United Way. And typically, the best thing that happens is they use appreciated assets like stocks. And if they do that, they get they get substantial tax deductions from that. That's one of the reasons somebody would do this. But also to get that, they get income and they like that. I was part of in one organization, we were able to do many of these charitable remainder trusts, and I was actually able to see some of them come in with significant gifts. At United Way, I was part of we were part of a group of 5 charitable organizations. A gentleman had done a charitable remainder trust. He passed away quite soon after he did that trust, and the beneficiaries were 2 daughters. And that was like 30 years ago. So when I got the call from the trust officer that was managing this, she said, well, there are 5 charities. The fund has $13 million in it. And that is shared, $13 million is shared equally among the 5 charities. So that was a significant planned gift that came into each of our charities, over $1 million each, right? And that was amazing. And so if you learn about you're having a conversation with your donor and they tell you that, yeah, they've set up a charitable remainder trust, you need to find out if you're the beneficiary. Or if they say, yeah, I'm looking for some income, and that they have maybe the capacity to do a charitable remainder trust, they have that capacity to do $100,000 or more, you might suggest to them, well, I think we should look into this to see if this might suit you, because you can make sure you have beneficiaries, but also you'll be able to make a significant gift to United Way and receive some tax benefits from this. As I said, there's different kinds of CRTs, but it gets more complicated. So this is just the basics of it, and it's another session to learn more about these. But if people say, I need income, charitable remainder trust or charitable gift annuity are the 2 products that you might want to talk about with them.
Hey, Denise, I just saw a question about irrevocable and revocable and what the difference is. And irrevocable means you cannot change it. It is done.
Right.
And
It is done.
revocable means you can make changes later. So when you're looking at a charitable remainder trust, that's a done deal. Once you put your assets into that trust and you make the decisions about how long you want to be paid the annuity and what the beneficiaries are, then you're done. That's it.
Yes, exactly. Thank you. It is irrevocable because you're receiving tax benefits. That's one of the keys. Yeah. Okay. Donor advised funds. Hugely important to know about and understand. Very important to how you go about receiving gifts for today and tomorrow. So donor advised funds came about through investment companies. So Fidelity Charitable would be one, Schwab Charitable, community foundations do these, Bank of America Charitable Fund. These are all places where our people establish donor advised funds. And just to give you an idea of why this is so important, just the recent data I looked up today, there are 1 million plus donors in advised fund accounts. Grants made from the 10 largest donor advised funds totaled $22.41 billion across the country. And Eve also found that there is $250 billion sitting in these funds. So it's up to us to go get it, right? It's up to us to go get it. And it's all a part of, again, talking with your donor, because if you don't know if they are making their gifts currently through their donor advised fund, great to find that out. Because what happens is the donor will recommend grants to their charitable organizations that they love. And if I worked with, I don't know, 20 of my donors that had set up one of these funds, and they made their annual gift through it, but they also, I asked them to do this, name United Way as their successor beneficiary. So it's really because so much money is now parked in these funds. And oh, by the way, they don't ever have to make a gift. There's no law that says they have to make a gift from these funds. Interesting tax law, but there it is. So yeah, it's always goes back to cultivating that relationship, finding out if they have one, and would they please make their annual gift from this? And would they also make United Way a beneficiary? Because what also happens is that the parents set this up and they're using it to teach their children how to be charitable. Well, sometimes the children, when they take over, they have different charities that they support. So it's really important to know about how the family views United Way with these funds. It's just that there's so much money in the funds now that we have to pay attention to who has one and ask them for the gift from those funds.
One more thing too,
yeah,
Denise.
yeah.
The other thing to know is that once they put money into their donor advised fund, they get an immediate tax deduction.
Yes.
So they're not going to get another tax deduction when they make a grant to you, but they get it initially when they put it in the fund. So it's sometimes used as a tax kind of scenario.
Okay.
So, Licensed Tocqueville Society, which I'm sure you're all familiar with, but did you also know that there is a Tocqueville Legacy Circle? So, Tocqueville Legacy Circle recognizes Tocqueville donors who have made a gift to the endowment for at least $250,000. So, it has to be the endowment. And once they do that, then you can start recognizing them as Tocqueville Legacy Circle members. So, that really means they're really Tocqueville Society Emeritus. They're Tocqueville members for life, forever and ever. And you can get more information from Evelyn at United Way Worldwide. But I think there is some information online about how you can recognize them. But those are the essential rules around the Tocqueville Legacy Circle. But if you don't have that established, you definitely want to do that and start recognizing your folks that are in that group. One thing we used to do when we listed our names of Tocqueville members is we would put a little, asterisk next to their name so that people would know who was a member of the Tocqueville Legacy Circle. And we do, various things at events so they would get some recognition. And you can do special events for them too to make sure they understand how important it is.
Before we move on to the next one, I thought I saw a question run by about what kind of assets I think go into donor advised funds. So people can use cash. A lot of times it's appreciated stock because then they're getting a tax deduction for appreciated stock. And there could be other assets, could be a home, a business. It could be any of those things. It becomes very complicated at that point. But I have seen most people use appreciated stock to start their donor advised fund. I hope I answered the question.
I think they were also asking, that was all good information as well, but what kind of materials or assets you can use when discussing those options. And I know we had provided a couple that our previous speakers shared at our last plan giving session in my follow-up email that time. And I shared that I'm more than happy to include those resources as well. But if you guys have resources or examples or links or anything and you want to send them to me, I'll include those in the follow-up email after this call as well.
Thank you, Ivy.
Mm-hmm.
Okay. Okay, building your gift pipeline, making it easy for donors. So, as I think I mentioned, Eve and I are big fans of FreeWill. We both utilize them in our United Ways. And one of the things I really, really appreciated about using FreeWill is that they provide content that makes sense. They provide a schedule, a timing for when you want to promote plan giving, different kinds of gifts throughout the year. And it makes it very easy to talk about this with your donors. And if you have a person that does your marketing and communications, they love it too, because all they have to do is tweak it a little bit. What is FreeWill? I just told you my exuberant endorsement of it because of what I liked from it. But Eve, do you want to just kind of talk about it from more technical?
Sure, sure. And before I get to that, I just want to say something. I know we've used the word estate quite frequently throughout this, and I don't want that word to scare you. I don't want you to think that you have to be talking to super wealthy people, or for people that are your donors, for them to think, it's a bad word. All estate means when we talk about it is the sum of all of the assets that the person has. So it just refers to their home or a life insurance policy or their IRA or whatever cash they have on hand. It's just, a one inclusive term that means all of those things. So when we talk about FreeWill, it is a site that they can go to then, and they can just create their own will. So this really, I think, will appeal to a lot of donors that don't have a complicated estate. If they don't have kids or they don't have a lot of things going on, it's just fairly straightforward. This would be a great tool for them. And it's a great way for you to talk to them about United Way and including them including us in their wills. So they go to a site, and we'll give you that in just a moment. In the next slide, you'll see what the link is, and Ivy can send that to you as well. But basically, as Denise said, it is free for you, it is free for them, and they provide a ton of verbiage for you. As Denise mentioned, I know that there's some sites on United Way Online that give all of this for you, but they're very helpful, and you can use it and do a sequence of emails. You can put it in newsletters. When I used it, I really marketed it a lot, and we had a lot of success actually. And I marketed it on Facebook. You can be very strategic and very specific about who you want to target on Facebook. And I chose, certain areas, certain zip codes, and certain age groups. And we had quite a few people sign up for this. What I do want to mention, as you can see here, is that you are already enrolled in terms of bequest intents. However, they do have two other tools. One is for QCDs from IRAs, and the other is for stock gifts and DAFs. Those do have a cost to them. So if you want to consider that, I think you should investigate if that's something you want to do. We did not do that when I was in United Way of Greater Atlanta. We chose not to do that. We just used it for the bequest. And then we had them directed to other places for IRAs and for stock gifts. Go ahead, Ivy, next. So here it talks to you about, here are all the links. These are not live, so we can't access them, but it does show you that United Way Online does have all of these documents for you to peruse, all kinds of ways to talk about this and to how to appeal to folks, and really, really thoughtful verbiage I think you'll find really useful. Yeah, and now this one tells you about the data so that you can access the list. So FreeWill does not maintain the list, so we don't want to bug them about it once you start using this. You do have to go to United Way Online, and I do see the link here, so you do want to make note of that. But it's really quite easy. You get on, and you just keep track every month. And I just kept looking at it, and as I got new people, then I could thank them and send them letters and saying welcome and thank you and what have you. So they really make it easy for you. And then the other piece of this is you do want to use this link when you give it to your donors. Again, this would be the easiest thing to put on your Ways to Give page. And this way, they will have to select your United Way. So once they get into the system and they put in their personal information, they do have to say, yes, I do want to give to United Way of Greater Atlanta, or whatever your United Way is. They will have to designate that. But you can test it. You might want to try that, as you see here, just to see how it works, so that you can feel knowledgeable when you're talking about it, and let them go ahead and test it out for yourself. Well, there you go. So Annie says local United Ways do receive a discount from FreeWill. There you go. If you want to use their stock and QCD tools. So there is a fee, but you get a discount. So there you are. Anything else, Denise, you want to add about FreeWill?
No, I took advantage of it, and they also offer they did offer little seminars on things too. So there's another way to get more knowledge. I think that's all we're trying to do is get more knowledge and be better at what we do.
Absolutely. And yeah, they offer all kinds of little webinars, I think monthly, really, all kinds of topics that are relevant to our work, things on writing good emails, things on, what the trends are. Like they just, in fact, had one on women in philanthropy and why it's important. I mean, I think we all know at United Way, it's important to focus on women donors, but there is quite a few options. And again, just to build up your knowledge about how to be more effective, I think is always helpful. So moving right along to gift acceptance policies. Again, I don't think you have to have these in place to start talking to people, but I think you eventually want to put something on paper because it does end up protecting you. You want to be sure that if you get in a situation with, kind of an odd gift that you don't have to accept it and you don't have to, call 20 lawyers. So you can definitely define, the type of gifts that you want to accept. And it helps, I think, just to add transparency and to protect you all the way around. I think actually also Ivy in the last session sent out 3 different examples of gift acceptance policies. So we can do that again too, so that you can see what they look like. They don't have to be that complicated, but I think it is good to just be able to list, here's what we'll take, so that people know right up front.
Okay,
and go ahead, Denise.
So, the key elements of the policy would include a purpose statement. Why are we doing this? The type of gifts accepted, review process for complex gifts, your legal and financial counsel role, board oversight, and the right to decline gifts. And this is where I'll just share a little story about what happened. I received a call from a woman whose parents had passed away, and she had 2 pieces of property in Detroit. And she was interested in gifting those to United Way. So I immediately went to my gift acceptance policies and talked with her about what we would require to do something like this. I actually went and visited the 2 properties and came back to our team and said, okay, this is where they're located. And one of the program team members said, this one property, we're trying to go into this new area. This might work out for us. So we want to do a little more research on this. In the meantime, I worked with the donor and said, this is our process. It would go through our finance committee team to review everything about this. And it's going to take some time, and we're really pleased that you would think of United Way for giving us these 2 pieces of property. In the end, it turned out that, well, one, we would not take for sure. And the other one, it was not really going to work out for us in terms of the program we wanted to do. So I called the donor and I said, for these reasons, we would not be able to accept these properties. What she appreciated was the fact that we had our policies in place. We were very professional about it. She appreciated that and ended up making her own gift to our United Way, even though she lived in the Washington, D.C. area, in memory of her parents. So it's a good thing to have this in place so you can rely on it and you can work with a donor when, you get something kind of crazy. Eve has a great story about this.
Oh yeah. So you can get some odd gifts. And I recall when I was in Atlanta talking with one of my colleagues, and someone wanted to give them a gift of racehorses. So you just never know. I mean, people end up with things because they inherit them or whatever reason. It could be art, it could be jewelry. You don't know. And honestly, I would work with Brian Klontz's group in Florida, and he will put that information in the chat so you'll have it just in case you get some weird gift. And I would also use him actually for property as well. And then they go through the whole process, like Denise talked about too, and looking at the property just to make sure it's not, an environmental disaster. You don't know, you don't want to accept that. But sometimes it could be a good gift that you do want, and sometimes you're just going to end up selling it right away, just like you do stock. So it's important to, as Denise said, have something written down, and then other people you can consult on it.
One thing I want to add to is, so, how do you go about this process of putting together gift acceptance policies? So when I went to United Way for Southeastern Michigan, I was really actually starting up a program from scratch. And so I put together a committee of people with different expertise and background, and it was their job to help me do this. I mean, I had a very good idea about how you do it because I had worked at other organizations, but I really wanted them to look at United Way in a unique way and think about United Way and what we should put together. So they helped me do that. It took about a year to put that together because we wanted to go to the finance committee with our recommendations, which we did. And we had a person on the finance committee with real estate background and said, well, what about this? What about that? So, that was very helpful because everybody bought into the process. It showed that we were being very professional about it. And then once the finance committee was satisfied with what we did, they sent it to the executive committee and they approved it. So it took about a year to get all that done. But it was worthwhile because I was confident that I had good policies to work with, and the rest of the organization had good policies to work with.
So here's some guidelines I think are really helpful. I think, naturally we want to be accepting of bequests, donor advised funds, and IRA gifts and CGAs, as we've talked about. I think we want to proceed a little more with caution when we're talking about real estate, closely held stock, tangible property. And then, as Denise talked about too, you need to have a committee that can review if you do get some complex gifts. Some folks have a plan giving committee, and this is one thing that you can have them work on, that they can really review it, and then they can send that to the finance committee to review again. So make sure that many eyes are looking at this because it can be if it's not a good gift, it doesn't help you. So good guidelines.
Okay, so let's do something about this, right? Easy steps here. So if you don't already have it, add a legacy giving page to your website. And identify just 5 loyal donors for this approach. And utilize what the resource is in terms of updating your gift, drafting or updating your gift policy, and use United Way worldwide resources. They're there, and they can be very helpful.
One of the things to add as an action item too from our speakers at our last plan giving session is even just to include a little note at the bottom of your newsletter or your letterhead. And I know that's an action item that I took moving forward with rewriting some of our emails for United Way Next, is there's just like this little PS at the bottom in case anyone's ever interested in doing that as well.
Thank you, Ivy. That's great. And there are so many ways to market this. And for sure, I think one of the things we know about plan giving It is not about, it's not similar to annual gifts in that you probably need to see the message about 7 times about plan gifts before it really sinks in and you take action. So it is a longer kind of approach for sure, but there are many ways to market this, and certainly putting in just a sentence or two somewhere is super helpful.
Yeah, and so our next slide after that is just Q&A. So before we open it up, unless you guys had anything else to add, I was just going to mention, if any of you have to hop off before the Q&A, this call is recorded. So I will be including everything from the Q&A session in the replay. And as I mentioned, I will link to all of the resources that everyone shared in the chat and from our previous planned giving session, as well as the slides for this. And you will also be prompted to answer a quick survey if you hop off, just letting us know kind of how you felt about the session and if there's anything we can do to improve our events moving forward. Otherwise, I will open it up to the Q&A.
Thanks, Ivy. Well, that was a great session, Denise and Eve, and we'd love to hear from others, whether you have a question or you have best practices or any information that you want to gather from the time that we have left.
I just want to also say that, you know, when I started in plan giving, I didn't really know anything about it. And so I just said, okay, I was very lucky. I went to some classes that were put on by our community foundation and decided that's what I really wanted to do. And very lucky that way. And I didn't learn it all in a day. It took me 22 years to get really good at this. So don't get discouraged. I know that you're wearing a lot of different hats. And I had the privilege of just wearing that plan giving hat most of the time. And last 5 years of my career, also the major gift hat. But it all blends together. And it's just, this whole thing is to help you become better at your jobs, become more professional, and serve your donor better. And so we're delighted that we were able to hopefully help you do that today, give you more information to help you do that today.
You know what? I want to echo what Danielle Liebfried said to everyone. She said, I think we should all create our own wills through FreeWill and put our money where our mouths are. And I'm going to say, right on, because you are so right about that. I echo that sentiment, Danielle, and I actually did do that when I was at my last United Way. And I got to tell you, it was so easy, just like Denise talked about. It's just one form to whatever financial institution is handling your 401k program. And you just write in, United Way is your beneficiary. Super simple. Thank you for that, Danielle.
So we are getting some comments in the chat. The first one from Jennifer, and she's asking that she'd love to hear about ways that you acknowledge planned gifts. The Leadership Tocqueville Legacy, the Tocqueville Legacy Circle is interesting, but we also have people who have expressed interest in leaving bequests, but not to the endowment.
Mm-hmm. Yeah. So, okay, so 2 questions there. So the first one is, how do you recognize folks? So I'm sure Denise had her own process. My process was that typically I would just send a personalized thank you note. Then when we received, notification that we were included. And then the second step would be that my CEO would send a thank you letter. And then typically also, as I mentioned, we would put, if they were Tocqueville members, they would receive an asterisk after their name in our list. But I also had a running poster board that I would keep names on. And so that poster board went to events with us and stood on an easel. And so people could see their names on that. And you can also put things on their name tags, assuming you do name tags at events. You can put, because typically you have a name for your group. We called ours our Legacy Society. So we could just put that underneath their name tag so people knew that. But also you can hold special events maybe it's just a thank you luncheon once a year. I mean, there are many ways to do that, but I think for sure recognizing them is super important. And
Yeah, I went to the same school that Eve did about that. I did all those things too.
There was also a question by Sarah regarding some of the links that when she goes to United Way online, some of the links say pages not found. So all of the slide decks that we're sharing with you that came from Evelyn Morgner should be linked to United Way online, and you should be able to have access to. But if you find any of the materials we send out are broken, let us know so that we can make sure we resend it out to the group, because we want to make sure you've got what you need. A lot of the things we receive are directly coming from United Way Worldwide regarding the resources. There was a question by Paula, and I want to raise this up. For those who are doing this, and I'm not sure what she was referencing, are you working with stockbrokers that continue to manage the donors' funds?
Well, one of the things I was able to do was introduce myself with investment advisors. So that would include people working in the stock market. So I made it a point of like trying to have like a half an hour conversation with the top firms in our community. Or if I got references to who was really doing a lot of work, or estate planning attorneys, would introduce myself, let them know what our program was about, make sure that they knew we were very professional about how we handled information and how we were treating our donors. And so that's what, when you say working with them, that's what you can do. That's what you can do.
I think Jennifer had another question about the Tocqueville Legacy Circle and about folks that didn't include or that included us in their wills but did not designate the endowment. That's, also a lot of people want to do that. They feel strongly that they would rather give to current needs, and that's fine. So yes, you can still acknowledge them. They're just not going to be part of the Tocqueville Legacy Circle. So in that case, they're going to be just part of your, plan giving group, which we called our Legacy Society. So you can just differentiate between those two.
So there is another comment in here. First of all, I want to say thanks to Annie Davies for all the resources. Annie is a great resource as a Senior Director of Regional Engagement. For those of you who don't know Annie, she's on the call today. And Annie, if you want to unmute, if you're still on, and introduce yourself, just so the folks know kind of who you are and the thoughts that you might have around planned giving, that would be great.
Hey, Carol, thank you for the introduction. And hello, everybody. I'm seeing a lot of familiar faces and names on the call as well. Yeah, and so happy to partner with United Way Next in terms of supporting CEOs and staff across the network. And one of the ways that we're doing that in terms of revenue diversification is really trying to make sure that we're getting the word out on the benefits of including planned giving in your revenue diversification strategy. So if you want to talk about this more, I work a lot with Evelyn Morgner as well, and we do some sessions for United Ways, and also can help, as well as United Way Next volunteers, with helping to communicate the value of this to your board and investing time and energy into planned and asset-based giving. So just another resource for you to put in your toolkit, and also know that you are not alone in figuring all of this out. So thanks, Carol.
Thanks, Annie. So that kind of, I know Pam made a comment. It was a really long chat in here. And so I'm not sure, Pam, if we want to go there, but I really love that you named your legacy circle 1944 based on the year that your United Way was formed. I think that's really great. And you mentioned something about you were fortunate enough to receive an unexpected bequest, which you were able to use to open an investment account separate from your endowment, and that your endowment is with your local community foundation. So they hold those assets, that they're not really yours, right? So thank you for sharing a bit more about that. I wanted to just take a minute before we get, we're getting near the end of the hour, and Just say thanks to everyone for staying on as long as you did. I know we all have other pressing priorities and you could easily step off this call, 10 minutes before the hour, but your commitment to being here is obvious, and that's great. Our two guest speakers today, I think, did a fantastic job. They're experts in the field and they are here as resources to you. So thanks to Denise Fleckenstein and Eve Powell for doing what you do and just being a part of our planned giving faculty. So thanks, ladies, for your support today. And then Ivy Cirillo from our team, who does an incredible job. One of the things she'll do, as she mentioned, is send out the recording. So for people who listen to this afterwards, if you have additional questions, don't hesitate to reach out either to us at United Way Next or to your regional engagement directors and others across the network. Each of you are professionals in the field and you all have different experiences. I'm looking at Marnie Foster and her team, and they have resources in Illinois, and Danielle Liebfried is in Iowa, and there's resources there. So you're not alone in this journey. We want to make sure that you feel supported. So whatever we can do to help you along the way, please let us know. United Way Next does provide planned giving support in mentors. So if you are kind of feeling like it's time for your United Way to get started and you're not sure where to turn, when Ivy sends out the email as a follow-up, you'll have my contact information. You're more than welcome to email me. I'll host a quick discovery call to learn more about your needs. And then I will pair you with one of our amazing planned giving faculty members like an Eve or a Denise or a Roma, who's not here today, who can help guide you in your journey. And they will obviously work closely with United Way Worldwide and all the resources that are kind of available at your fingertips. So with that said, Ivy, I want to turn it back to you, and Denise and Eve, in case there's any other things we wanted to share today.
Yep, so there was just one question that I don't think got answered, so I went ahead and tagged Denise and Eve in the chat in case you wanted to answer that. Just a reminder that a survey will pop up, and then I will also link to register for the next planned giving session if you're interested in that. Otherwise, I will hand it back to Denise and Eve.
Well, thank you everyone for coming today, and hopefully you got a little bit more knowledge about planned giving, and it's all a bunch of building blocks for everyone who's in this profession, and I hope we were helpful today.
Yeah, I just want to tag on to what Denise said earlier. Boy, it took me a long time really to get good at this too. So don't feel like you have to know everything, your first month or your first year. It is something that you just keep accumulating over time, and you just keep attending seminars and webinars and, do some reading and listening. And I think it's an awesome way to talk with donors, because those donors that contribute to you through a will are the ones that really, really love United Way. They are very committed to your organization. And, think about it. If you're putting somebody in your will or putting something in your will like United Way, they must feel really good about us. So I always enjoyed my conversations with my planned giving donors. They're the most committed donors and they really want the best for us. So enjoy that.
So is this where we promote the next session?
Got it.
Okay. So Wednesday, April 23rd, Carla Krosno is going to be our presenter. And this is another building block in your toolkit here. And it's going to be on leveraging volunteers, prospecting, marketing recognition, and building relationships with the finance department and key stakeholders. So something a little new, and we hope you will attend.
Yeah, Carla is awesome. She used to be the development person at Miami, and I met her years ago. So I think everybody should plan on attending that session.
Excellent. Thank you everyone for joining today. We'll see you at the next planned giving session, if not before.
Thank you all.
Thank you. Have a
Thank
great
you.
rest of